Hey everybody, Joe Malone here, coming to you live on Dallas Trading Floor. It is Monday, August 10th, 2020. And it is kind of interesting day. The market has been slipping a little bit this morning. We are live on Facebook, YouTube, Twitch TV, Periscope, and TikTok. Hopefully we'll be live on TikTok for longer. There's the TikTok seems to be in discussions with Microsoft, but who knows? You can never tell with what's going on. But great to be with you today. It's kind of hot here in Dallas today, but pretty nice, dry heat and all that stuff. Hope everything is going well wherever you are. And we're just going to get into it really with the slides right now. So here we go. Basically, the market is still in an upward trend. And by the way, if you want to see what I'm talking about here on TikTok, all you have to do is go to YouTube, and I'm broadcasting live on YouTube. This is show number 106, youtube.com/Dallas Trading Floor. So we are in a confirmed uptrend, and as you can see by this legend here, when you're in a confirmed uptrend, it's the time to buy stocks. So we're still in a buy mode. We're still trying to buy the right stocks right now. If the market turns under pressure, you'll see this yellow arrow, and then that's basically time to kind of consolidate your holdings and maybe pull back a little bit. And then the down arrow, you want to get into cash and possibly short. But right now, we're in a confirmed uptrend. The Nasdaq's down a tad, but it's bumping up that against that 11,000. That 11,000 11,000 level, and it seems to be bouncing down a bit. S&P's up, Dow Jones is up. Kind of a light day, relatively speaking. Just wanted to show you the spider. And of course, everybody, this is the largest ETF in the world, and many people have their entire life savings in this. So not what I would recommend, but a lot of people do this. And this is the spider, and it follows the S&P 500. It's up 60 cents today. It's really doing very nice. It's been moving, moving up from about the 325 level. And so it does show strength. And this is the overall market. So we are still in an uptrend, even though there's a lot of naysayers out there. They're saying we're not, but we are still in an uptrend. And that's the thing to be very concerned about, because you don't want to be short a stock right now. You want to look for the potential new leaders and then go from there. We are down a little bit on the QQQs today. It's at 270, which is which is very, very good. I mean, anything above 250 is pretty excellent. It's down though when this slide was taken. Here's the thing about the NASDAQ 100. All the big growth stocks are in there. That includes Microsoft, it includes Apple, but increasingly, because of the valuations of Apple and Amazon and these kind of stocks, many of these stocks are now in the Dow, if you can believe that. That is definitely true with Apple and Microsoft. Also in the Dow are IBM, which is not included in the QQQs, and also Intel is, believe it or not, in the Dow, and it's also in the NASDAQ. So the NASDAQ is becoming it is a leading indicator of the tech stocks, but the Dow is increasingly having stocks that are in the Dow, are in the Nasdaq, or as well as in the Dow. But the Dow is still a very small. It's only 30 stocks in the Dow, and it used to be more industrial stocks. It's less representative, but the Dow is up today as well. Okay, just wanted to show you some psychological indicators. This is the put-call ratio. This is a very interesting ratio because it kind of shows market sentiment. And I kind of want to show you some things on this. It's been trending lower. Well, what does that mean? That means that the market is getting less volatile, which is very interesting. The market seems to be getting less volatile. So that's what this chart says. I mean, I don't know if I believe it, but it definitely is what the chart says. The market is getting less volatile. So we are in a confirmed uptrend. The market is getting less volatile. So it's interesting. It seems like the stimulus seems to be working. So that's a good thing. That's a good thing, I guess. The stimulus is working, and we're good from there. Now, as a special thing on the show, I'd like to show you my low priced portfolio. And I just want to show you what I've added and what I've taken away, and then kind of how it lines up. This is what I'm doing is for people that sign up for this, I am giving trade alerts on a low price portfolio, basically under $10,000. I started out with about $6,000. I'm up a little bit. And I'm showing what stocks I'm trading, what stocks I'm putting on, what stocks I'm putting off. All that's required for this is I'll have this up hopefully this week, is to just return an email to us, confirming your email address, and then give me 2 emails of your friends so they can see it. But anyways, what we have here on the low price portfolio, I've added 2 today, a full position in Sorrento Therapeutics and also a full position in PFS Web, which is just breaking out. I did remove United Micro from the list, and I kind of want to show you how I'm doing on these stocks so you can know that I'm actually trading these. Here it is. This is the portfolio that basically is the low cost portfolio. We have Blink Charging, which we're up about 75% in 25 days. That's pretty good. We entered that at about $640. It's about $1,100 or so dollars. I have 100 shares of that. I've taken 3 positions, by the way, in Sorrento Therapeutics. I added one today. I have 150 shares. The buy price is average is about $13.67. It's up to about $18.50. It's about in 5 days. It's up about 38%. So that's pretty good. Now I just entered a position. It's down about 2%. Ouch. But it does have a very good chart, and I'll show you that in a second. It's PSF Web. It's an outsourcing company in Allen, Texas, that has a very good roster of clients that do the back-end web maintenance for a lot of retail companies, which are very prominent here in the Dallas area. Now, here's how I trade this portfolio. Again, I started with about $6,000. It's up to about $7,000. That's in about a little bit less than a month where we've done that, so we're doing okay. Basically, the way to trade it is you take the value of the portfolio, divide it by 8, and that gives you 8 full positions. Currently, I have basically 3 positions for Sorrento, 1 for PSF Web, and my 1 position in Blink has grown quite a bit. I still am looking to invest about 2 more positions in this portfolio. But if you're interested in this portfolio, just go ahead and go to the website, Dallas Trading Floor, and just put in the Ask a Question comments, and just put in your name and if you'd like to take a look at this on a regular basis, and I'll get you right on the list. So thanks for this, and hopefully this will be a good try. Just doing a trial on this one, and hopefully it will be successful. So that's kind of where I'm at now on there. So I want to give you sort of an idea of the charts on this one, and this is the reason I added PSF Web. And I just want to show you. It's kind of the chart of the day, and basically there's a cup here, and then this is the buy point. The buy point is about 340, about 849, so we're right about the buy point, and of course that goes up about 5%. It has a pretty good composite rating of 95. It's up today a little bit. But what really set me off on this one was the fact that they had earnings per share. They just came through earnings. Their earnings were 1,000% better than they were last quarter. So I do think that we're gonna see some investment in this. This is a very small stock, so it's not a huge company, but it does look good, and hopefully it will move up. This is the symbol on this is PFSW on that one. That's the symbol on it. So just to give you that. All right, so let's go to some questions. All right, thanks. On the Lakeland Industries chart. Okay, well, let me just take a look and see if I can find out what the symbol is for Lakeland Industries real quick here. So I'm just going to put in Lakeland. I'm typing away furiously to see what the symbol is on that one. Okay, well, Oh, it would have helped if it also helps if I spell it right. L-A-K-E, Lakeland. There we go. L-A-K-E is the symbol for that. So let me look at that real quick. All right. Hopefully I'll have, oh, they're Lakeland Industries. Huh, okay, well, I am not that, well, this is an interesting, this is definitely up. I don't know about this one. Let me show you the chart on this one. So let's kind of go through the chart together on Lakeland Industries. Currently, Lakeland has it gapped up here on earnings, and it looks as if it's just getting ready to report. Let's see, that was March. So I'm wondering how close to reporting this is. Let me just take a quick look to see how close we are to reporting day on Lakeland Industries. It's probably best not to buy this right before right before earnings. It's probably best to wait until after earnings to see kind of what the upshot is. And this is really important. This is kind of a fundamental rule of investing. If you're moving into a stock, wow, it is 97. That is super. Yeah, this isn't a bad chart at all. Not a bad chart at all. I'm just trying to find out what the okay, let's see if I can get I'm trying to get the market fundamentals. That's what I'm doing right now. So there we go. Yeah. All right. Perfect. So let me show you the chart here for Lakeland. This is for Lakeland Industries here. Okay. It looks as if it still is basing. I don't know if this is definitely a watch list. This is number one in the group. Boy, that's good. No debt. Wow, look at that. That's nice. Earnings per share. Okay, it had a really good quarter last quarter. The reporting date on this one is 9/9. So we're coming up on the reporting. Very interesting. This is very interesting. I wouldn't buy this one right now, but I would watch list this. I would wait until September 10th to buy this one. And you ask, well, why would I do that? Well, the reason I would is because you don't want to buy this through earnings. They had such a good earnings last time. If they repeat on this is going to make the stock move. But it's dangerous to buy this right now because prior to earnings, because if their earnings disappoint, this could get slammed. So what I would do with Lakeland Industries, and this is a good one, by the way, I would watch this one. I would get ready to buy this one. I wouldn't buy it though until September 10th. And the reason why is because that is the day after earnings. You just don't want to go into earnings and then have it drop on you. That's the only thing. I mean, that's the only thing. But I really like the question, Chris. I so appreciate it. And basically, it's a very fine stock. There's no question about it. It's got about 40% fund participation in it, so that's excellent. What I really want to say about this one is don't go in this too early, because here's the thing that happens a lot of times with these really great stocks that are starting to move, and this definitely is that even though they report a great quarter and they produce, they will sometimes be a fall off afterwards, because it's the old adage, buy on rumor, sell on news. So the thing to do with this is to get ready, watch list it, and then possibly look to buy it after the 10th. Now, it doesn't have a firm pattern, but it looks like it is coming into a pattern. So again, I would wait on this one, but it is very strong, and I think I really appreciate you bringing this up, because it's a great stock, and I think that it has a lot of potential. Want to become famous? Okay. I would like to become famous, but I don't know if I want to buy followers. Hopefully, my idea is to make followers rich. That would be great. If I could make lots of followers rich, then they wouldn't have to buy them. They could buy me. That's what I would like. And by the way, I'm trying to do that with my low-cost portfolio. And all the stocks in here started out as under $10. Okay. Now, I don't recommend this for everything. This is not a, this is just an idea that I have, because I know a lot of people like to get started with low price stocks. And actually, it's easier to trade high price stocks, fewer, better stocks. But there are, believe it or not, some good low price stocks that are under $10. Typically, you don't want to buy stocks under $5, but I do sometimes have some on there. I had to take one off United Micro because under $5 because it just didn't perform. I mean, I bought it and it just sat, and so I had to kind of move it out the door. But I do have I have this low price portfolio, and hopefully people will take a look at it. You can do that basically just by going to my website, DallasTradingFloor.com, and just putting your name in to subscribe for the action trade alerts. And then this one, we're putting together this portfolio, and I'm showing you little pieces of it. And hopefully this week I'll have it done, and where you can sign up for this and then just look at it kind of in real time, because it's a Google Sheets thing, and it'll update real time to show you kind of how I'm doing and what I'm putting on, what I'm taking off, and maybe it might give you some trade ideas too. So hopefully you can make some money on this. I definitely have done well on it. Let me just show you really quick kind of what I'm talking about. I have this one, and I just will show it to you real quick. This is the portfolio that I'm talking about. This is my low-cost portfolio that I have now. And currently, this is at Charles Schwab, by the way. You can see I have 3 items in here: Blink Charging, Sorrento Therapeutics, and PFS Web. I did remove United Micro from this. But anyways, I'm going to expand this, and this is a way to trade little money, hopefully for big money. So that's the whole idea behind it, behind that. So thanks for taking a look. Oh, wait a minute. That's want to be famous. I guess I do want to be. Hey, thank you, Adrian. Appreciate it. Thank you very much. Thanks for watching. I do like it. Okay, great call. Oh, hey, thanks. Hey, on Sorrento, you want to basically hold this. Here's the thing with Sorrento. We're moving up pretty nicely on that one. I actually added to my position. I added 1 full position this morning. I have adds it to 2 positions, full positions that I have. So I have 3 positions on this right now. Here's what you need to do with Sorrento. As this thing kind of moves up, you want to take your stop loss and you kind of want to move that up and keep it within about 10% or so of the price. And then if we do get a reversal, and I hope we don't, but if we do get reversal, then it will sell you out at a profit. And that's what this is all about, making profit, right? So, so that's why I did go a little bit heavy on Sorrento. When I first started this idea, I went with Blink Charging, and unfortunately it got away from me. It went up too quickly, and I wasn't able to sort of leg into the position like I would. So whenever I see real strength like this, typically I like to leg into the position, and hopefully I will find other ones like this. But for some reason, this is doing real well right now. What I would recommend is getting your stop loss and moving that up as the stock moves up. And then if we do get a reversal, and I hope we don't, but if we do get a reversal, then you'll be sold out at a profit. And then hopefully you'll like me and you'll tell more people about my little experiment. So I appreciate that. Anyways, hey, why did you drop UMC? Well, I dropped UMC because it just didn't perform. It was like, here's the thing. Typically, when you enter a position, I try to enter them on a good solid chart pattern. And if the chart pattern is good, but it doesn't go anywhere, it just kind of sits there. I'm like, well, why should I waste my money here? I'll just sell it. And I always have by the way, every time I go into position, I always have an 8% stop loss on it anyways. But sometimes, even if it doesn't go down 8%, I just don't want to hang out. I'll just sell it and I'll find something that's better. That's what I did today. I was looking at it, and UMC wasn't doing quite as well. And so what we did was we said, well, okay, we'll just put that one in and change it out for cash, and then take that cash and then deploy that cash better. And what I did there was Sorrento Therapeutics, because it was moving very nicely. In 4 days, 4 days is up 36%. So that's pretty good. And I wanted to push money into that one. So my kind of idea, it's sort of like many years ago when I used to, believe it or not, sell cars. in San Francisco. I was at a dealership, and every month they would look at the board, and they would look at the board of the salespeople there, and the bottom guy or gal got fired every month. So that's kind of what I'm doing here. I'm I'm firing the one that doesn't produce. Fortunately, it's not a person; it's just a stock. So that's what I'm trying to do. Is just try to always push into the best one. So that's the reason for United Micro. It's not a bad stock. It just didn't do what I wanted, and so we had to part company on it. So nothing really bad. Okay, I know you like GDBC. Wondering if you could look at the Bitcoin US dollar chart. Slightly different, specifically closed last week. Let me see if I can pull up a chart for the U.S. dollar BTC card, the Bitcoin U.S. dollar chart. Let me see if I can pull that up. You have to give me a second on this one because I'm not sure I know exactly how to pull that. The reason the reason I use the GBTC for the Bitcoin is because it's very, very liquid, and it's easy for me to put it together. So let's see if I can find a chart for you on that. I don't know if I can, but let's see if I can find you a chart for that. I'm going to put BTC USD. Gives me anything here. Oh, invalid symbol. Okay. I'll have to get back to you on that. I'll have to get back to you on that, Mr. Walsh. But I will try to see if I can get a chart for that. But in the meantime, and I know you probably don't want to see this, but I'm going to show you the actual Bitcoin trust. This is the Greystone Bitcoin trust. It basically holds about it holds about 4% of all the Bitcoin in the world. So the symbol is GBTC, and it's kind of I like it because it's very liquid. It's up today. Wow, look at that, nice, very nice, very, very nice. Let me see if I can get you a really good chart on that. So let's look at that really quick. GBTC. And I like playing on the Bitcoin this way just because it allows us the liquidity. And looky. That is very nice. Okay, guess what? Folks? We have a buy point. Very interesting. The buy point is 1257, and that's going to give us a buy range up about 1.5%. So this is just extended, just barely extended. So it looks like there's some definite interest in Bitcoin right now, and it looks like there's been some strong buying. So this one you might want to watch list, GBTC. It is looking like we might be in a situation that that we're about 9% up from the pivot in 3 weeks. Okay, we're a little bit extended because typically we only want to be 5% from the pivot. But let's look at where the pivot is. The pivot is basically 1258. So it's not really buyable. I would wait for this to move down a little bit, but we're definitely seeing some very much interest in we're definitely seeing some great interest in the Bitcoin area. I'm not currently in Bitcoin Trust, but that's a great way to play it. And I will try to get some more information on the Bitcoin versus the US dollar if you're actually buying and selling directly Bitcoin. So let's take a look at TikTok. Oh, hey, hello from Chicago. I love Chicago. By the way, I hope that, I don't know what's happening with the baseball action there. I used to do contracts up in Chicago in the summer, and it was just great because I got to go to Wrigley Town and all that great stuff. And I really like the baseball scene in Chicago. Two great baseball teams, so it's pretty excellent. Hey man, thanks. You cleared $15,000. Hey man, that's pretty awesome. Okay, what's the story with CHON? Let me look at that one. What is that? COHN. I'm sorry, COHN. Let me look to see kind of what's going on there. See if I can give you kind of an idea. CHON. So let's see. Huh. Oh, look at that. Panama Canal missile seized. Oh, that's interesting. Yeah. Get such interesting news on here. Apparently, Cuba was trying to trying to push missiles through the Panama Canal. That's interesting. All right, we have a question about Ford or F. I don't think Ford is ready to buy, but if there's one company that I think that can possibly benefit other than Tesla from the oh, look at that. It came right up. It's at a buy point. Wow, look at that. I want to show you this chart. This is pretty cool. This actually may be a low cost stock that you want to get. I can't believe it. I mean, it's not quite there yet, but it's moved. It looks like it's just moved above the 200-day moving average. That's very, very bullish. And it's at 709. That's very good. It's in a buy zone. That is unbelievable. It's actually in a buy zone. Okay, well, let me just check something here real quick. I just kind of want to check to see when Ford reports. That's very, very important because with a stock like this, you just don't want to buy it prior to earnings. You just want to wait till those earnings and then possibly buy it. But this might be a good one for the low cost list. Look at that. Interesting. Okay, well, the earnings per share not so good. Let me show you this. I think you ought to see this. So I'm hoping this is why you don't want to buy it until at least October 27th. The first day you really can buy this one on is the 28th of October. And the reason why is because it really needs to go through earnings. Because last quarter it just had terrible earnings per share, down 225%. I really like Ford. I'm rooting for them, but I just don't. It's not too early right now to go into Ford, but it's definitely a watch list. I mean, Ford is definitely a watch list. If there's one company that can probably benefit from the electric vehicle revolution besides Tesla, and of course I think Tesla's going to be the main beneficiary, is going to be Ford because they have a very good business in the medium duty truck business, which is a tremendous area for the electrical vehicle area because, of course, as you know, electrical vehicles require much less maintenance, and because electricity is much cheaper than fuel, as a matter of fact, it costs about a 20th. I mean, it costs about a fifth of what it costs for a gasoline or a diesel truck to fill up a battery truck. It's kind of interesting. Instead of paying, $20 or $30 or $40 for the fill up, it's about, $8 or $9 or even less sometimes. So this is a real game changer. And this is something that I don't think a lot of people have factored into it. Lower maintenance costs and lower fuel costs with the electric truck. Of course, the range has been the issue up until now, but with the new battery technology, even that might be going away. So I'm very bullish on this area, especially electric delivery trucks, the medium-sized ones. And I think Ford's big in this. But don't buy Ford right now because it is not time. It needs to be after earnings. We have to see kind of what the damage is going to be. How many of those F-150s are going to sell? Because they got to sell those 150s or else it doesn't look too good for Ford. They depend totally on selling F-150s. So hopefully they can sell a lot of them and then move their business over to electric, which I'm hoping. But not the time to buy them. It's the time to watch list them right now. That's the thing to do there. And okay, great. I bought back in Nikola, growing from here. Wow. Okay. Well, I think you ought to be really careful with Nikola. I think it's sort of a fad stock. They haven't really produced anything. That's the main problem with Nikola, but it's up strongly today. I mean, it's up $6 today. I mean, I'll show you the chart. I mean, it definitely is up. So, there you go. It's below the 40-day the 50-day moving average. Not something I'm terrifically excited about. It's rated 5 behind Tesla. The biggest problem I think with Nikola is, it just there's been a lot of selling. There's been a lot of selling of it, and I think you could get trapped here. It's also pre-earnings, so if you're going to this one is, if you're going to day trade this, I would be very careful. I'd set your stop losses very carefully on it. You definitely could make money on it, but I think any kind of long-term thing more than about 4 hours, in my opinion, I just don't think it's there. I'll show you actually a more annotated chart on this one. You see, I don't even see any buy points, but its relative strength is over 98. So a lot of speculation on this one right now. I don't know. I mean, they haven't produced a vehicle, but, people want to get into this business really badly. They want to be Tesla. They can't produce a car, but they want to be Tesla. I just think it's a sort of a, an also-ran, but you can make money on also-rans. They have some strong buying in here. So a lot of retail investors seem to like this one. There actually is some fund, some fund sponsorship, 9% of funds, but mostly this is retail investors. So they tend to be a little bit more, move a little bit differently than the institutions. I typically like to see at least 40%. I like to see 40% institutions in a stock before I get too excited about it. I just think that without those institutional investors, there's no strong hands, and if one little thing goes wrong, everybody heads for the hills. It's kind of like Raid, the Raid commercial with roaches. They just scatter. So I'm really leery about buying a stock that has less than about 40% investment by funds. And it's 9% on Nikola. But hey, people have made money on it, so I'm not in it myself. ZYXI, hold or sell, buy more. Well, this is one of the ones that I recommended, so I have to. Hopefully, I'm not going to eat eating some crow. I did get out of this one because it didn't perform, but it's still not bad. It's got a decent chart. So let me show you the chart for ZYXI here very quickly to give you kind of a view of it. It definitely had a support of a cup. There was a buy point at the buy point was about 13. It's now trading at 18, so that's nice. It's moved below the 40-day moving average, though. Here's a little bit of danger in this one. I think if I had a position in this one, I would close on it, and then I would wait until it possibly moved higher. I do believe the key on this one, unfortunately, is it broke through the 40-day moving average, and it's been moving down. It's now moving up. The question is, will it move above? Will it stay above the 200-day moving average? If it does stay above the 200-day moving average, that might be a buy point. I wouldn't be in this one. If I'm not in this one now, I would wait to see if it bounced off the 200-day moving average, or a price of about 14. So I would wait on this one to see if it corrects downward to about 14. If it reverses at about 14, I think it might be a buy. But currently, I would not add to a position if I had this. I just wouldn't add to the position, but I would hold it. I wouldn't necessarily sell this one, but I wouldn't add to this position at this time, just because of just because of the way the chart looks. One of my favorites here, Penn National Gaming. Let's take a look at Penn. The great thing about Penn National is that they are really they're really positioned well for the potential movement of sports gambling online. And I they've moved their headquarters to Las Vegas, and they've done a lot of really good things. And I like this stock. Just taking a look at the chart, we've got a first stage base. We had a buy point at about let's see, what was the buy point here? Buy point was about 37.21. It's up significantly from that. It's off a little bit. It's really in a profit-taking zone at the moment, if you can believe that. So if you have a 20% gain in this stock, I would consider taking your gain, or at least reducing your position by about half. Not that it's a bad stock, but it's just that it's run up about 20%. And as you know, the 20% rule says if you take a stock, it moves up about 20%, 20 to 25%, you want to consider taking about half of the position off, because you want to lock in those profits and move with the house. But I really like Penn National Gaming. Before entering this stock again, I want to see a little bit of a firming on it. We might have a flag pattern here developing. You don't know. If we do, then it's a super duper buy. But I would wait a little bit on this one. Just wait to see how it trades. If you've been in this one since the buy point, it's definitely a good time to possibly take half your position off and then let half your position ride. But I really like this stock, and I don't think it's definitely. I definitely think it has more to run. So, that's my opinion on it. CZR. Let me look at CZR. Oh, Caesars. Yeah. CZR. The biggest problem I see with Caesars is the fact that they're mostly oriented towards, and it's broken below the 200-day moving average. So let me show you the chart on this one. The quality act, the class act here is Penn National and not Caesars. I like Caesars. I've been to Caesars, really great place, excellent shows. And if you ever want to see a fight in Vegas, it's the place. But it's below the 200-day moving average. So basically, if I had to pick between Penn National and Caesars, it would be Penn National, no question. But I really appreciate really appreciate the question. The thing about Penn National is that they have a real good handle on sports, which is sports gambling is really it's a great thing. And I mean, if you're into it, I mean, it's very exciting, and I think it's really a lot of the future of gambling. So, Penn National over Caesars at this point. Nike. What does the chart say about Nike? Well, Nike, is it's the most valuable company in Oregon. I think NKE. Let's take a look at it. NKE. Yep. Okay. Wow. It's definitely in a buy zone. Look at that. What do you know? Okay. Well, here's what I see on the chart. I see that we are in a buy zone for Nike. The buy zone is 104.48. That is the buy point. 104.48 is the buy point, and it's up. Remember, if you take that 104.48, you multiply it times 1.05, that's 5%. That gives you the buy zone, and we're right in a buy zone for Nike. This is a very, very bullish chart, by the way. I think that we're going to see, this is a stage 1 cup with handle. So this is this is going higher, man. This is going higher. NKE, this is definitely going higher. And the fact is that I think they've just reported, if I'm not mistaken. Yeah, they just reported. So yeah, this is going higher. Nike is going higher, and this is more than a watch list. This is a buyable stock right now. This is a buyable stock. It's in the buy zone. So very exciting. I may, I may on after hours, I may look at buying this one myself. This was on one of my watch lists, by the way. So this is from one of my main portfolios. This is on my one of my watch lists. Are you a fan of? Is this DraftKings DUK? No, it isn't. Is that DraftKings DUK? Is that something for DraftKings? I am a fan of DraftKings, by the way. I think it's great. I think along with Penn National. No, this is Duke Energy. It's okay. It's they pay a lot of dividends. I don't like the chart. I'll show you why I don't like the chart. The chart's downtrending. Yes, it is. It has a failed breakout. Okay, what do I mean by that? Well, sometimes you get a base. This is a base. This is a cup without handle. And basically it broke out from the buy point. The buy point on this one was 97.07. But unfortunately, this is a failed breakout. You don't want to buy failed breakouts. And as you can see, it broke down. The chart pattern broke down, and now it is trending lower. It is under the 200-day moving average, though it's above the 40-day moving average. This is not a good chart. Don't buy this one, please. Please don't buy this one. Please don't buy Duke Energy. I'm not a fan of this chart. It's not that I don't it's not that I don't dislike Duke. I like Duke, especially their basketball team. But in terms of this chart, no, I'm not a fan of this chart. This is not a chart that you want to buy. But it's it's okay, but it's not great. Don't buy this one. Buy Nike. Don't buy Duke. That's what I'm saying. CBay, what do you think? Okay, well, let's look at CBay. CBAY. Oops. CBAY. Right. Canby Therapeutics. It's a cheap one. Oh, look at that. Yeah, it's broken out. Very nice. I think this one is. There is some potential here, but it looks like we missed the boat. The buy point on this one is 486. It's 486 on CBay. Is the breakout? Is the buy point? It's a little bit too extended from the pivot at $6.90. This one may go higher. This one may go higher, but I don't have enough confidence to buy this at this extended level. But it's a good stock, and it's definitely a watch list. I want to see a base form, but we definitely have a first stage base on this, and it's broken out of this first stage base on strong volume. So that's good. I mean, I'm not going to be probably in this one, but it's not bad. It's a little bit too extended. The buy point on this one is really about 490 on this one. About 490 on this one is the buy point. And again, of course, the buy range is going to be the buy point, which is 490 times 1.05, giving you the buy range. So I think it's a good stock. I think it's a watch list. This is so painful when you do this, when you've identified a really good stock like this, and you want to buy it, but it's extended. Man, this takes a lot of patience, because sometimes you have to let these things go. But if you buy this now at this level, because it shows support at $4.90, you have to be willing to let it pull back, because it's probably going to pull back to about 490, 495 in that range before it's going to move higher. So if you're willing to take the snapback, it might not be a bad idea. But it shows support at $4.90. It's currently at $6.90, $2 above. So that's pretty extended. So I don't know if you want to buy it at this point if you're not in it already. If you're in it already, then that's another thing. But I wouldn't buy it as extended as it is. I wait for it to give a little bit better base pattern, my opinion. Okay, thoughts on GMIA? GMIA. Let's take a look at the chart on GMIA. And by the way, for everybody on TikTok, I'm actually showing these charts on YouTube. All you have to do is go over to YouTube at youtube.com/Dallas Trading Floor, and I will show you the chart. Okay. All right. Well, this is a interesting one. This is a German company. Interesting. I'm getting this interesting questions on. It looks like a fairly new issue. There's some strong support. Really no pattern that's discernible. But we do have a golden cross. We do have the 50-day moving above the 200-day. That's very good. We have an extremely good relative strength of 99. Wow. This is a tough one, because it looks as if it's got fund ownership, 19%. Not bad. Not bad on the fund ownership action on this one. Hard to say if, boy, this is really extended. I think, I don't think you want to buy this one until it's settled. I think you want to see this one settle. I do believe we're going to see it move back down. It looks to me like we might have a base action potentially at about 14, but I cannot tell here. This is just too early. Let's look at the daily to see if I can get kind of a look at it. Its earnings per share is in 2 days. Don't buy this one until and 3 days from now at the very, very minimum. Please don't buy this before earnings. You're likely to get whacked if you do. So it's only 3 days to earnings. With a stock like this, especially, don't buy it before earnings, because even if it reports really, really well, it may drop. And so what I would do on this one, watch list this, wait on this one, wait until Friday, see how it reports on Thursday. If it reports okay, then you might want to come into it. But this is GMIA. So don't don't buy this until Friday. See how it reports. Don't buy it on a downtick. If it moves on an uptick, then you might have a winner. But right now, it's prior to earnings, and I want to see how it comes through earnings. It really, it really is. It really is just that simple. It has to come through earnings in order for things to happen. What happened to Fastly? Wow. Well, let's see what happened to Fastly. Hopefully, I know I haven't. It's not in my portfolio, but I actually know somebody that works there, is in the sales business over there. Yeah, look at that. It came right down to the 50-day. Okay, this is a lot of times why you don't want to buy extended. And it's just really simple. I'll show you this why. Okay, you see how it reported. It reported well. Earnings per share were up tremendously, 118%. This is a real good lesson here. Even if Fastly is doing great, their earnings are up per share 118% over last quarter, which is tremendous. But guess what? The stock fell. Why? Well, this almost always happens. This is why entering a stock takes a little bit of skill. And one of the things you don't want to do, even with a really good stock, is you don't want to enter it extended, and you don't want to enter it before earnings. So this is why you wait until after earnings to buy the stock. Now, if it firms up at the 50-day line, then it probably is going to go higher. I have a feeling this is going to go higher, but let's see in the next day or two whether or not it holds this $80 line. And it's currently at 78. If it holds there and it starts to move higher, then we might have a base pattern. But right now we don't. And so right now it's a watch list and it's not a buy, but it may go buyer. It may go buyer, may go higher. May go higher. By the way, everybody, I have in order to sign up for my action trade alerts, it's real easy. All I have to do is go to dallastradingfloor.com, and it's you just go right there and sign up and ask a question. I try to answer a lot of these offline as well. And I'm starting something new. It's Jim's low-priced stock portfolio, and we're up on several of our stocks. We've only been in existence like for about 20 or so days. We're already up pretty good on some of our stuff. So we try to get the very best low-price stocks in there, and that we're trying to put that together. But if you want to take a look at the action trade alerts and possibly the low-cost the low-cost portfolio, just pop over to the website, dallastradingfloor.com, and then just enter the information, and you'll be subscribed to, and it's free, and you can cancel anytime you want. So that's pretty good. And if you're looking on TikTok, super easy. Just go to my profile, hit the link, and you'll be taken right to the Action Trade Alerts subscribe screen. So just it's super easy. Put that in, and you'll be good to go. And by the way, if you're on TikTok and you want to see these charts and everything that I'm putting up, I broadcast on YouTube at youtube.com/dallastradingfloor, and also all of my episodes are archived on Periscope at pscp.tv/dallastradingfloor. So you can see all the charts and everything as they come. And I'm also on Facebook and on Twitch. So those are good as well. All right, so let's see. Let's get some more questions here. Thoughts on BGT? This is a question from TikTok. So BGT. Let's take a look at BGT. BlackRock. Okay. This is preservation of capital closed-end fund. No, this is a bad stock. This is an ETF, and I'll tell you why you don't want to do this. Let me show you why. As you can see, the 200-day moving average is moving down. That is a very bad sign. But the 50 days moving average, that's good. But basically, no, there's been a lot of buying in this. This may go higher, but the buy point for this is much higher than this. The buy point, you don't even want to consider buying this until it is past 1324 as a buy point. So currently this is in a downtrend, and it's probably not what you want to own. It's true. You may have gotten a recommendation from a broker or something like that, but most brokers have a very bad track record when it comes to advising people, and typically they advise them into ETFs that they make a lot of commission on, and sometimes they don't make a lot of money. And I think BlackRock is definitely in that category. BlackRock, they manage a ton of money for a lot of people, but some of the results are not that stellar, shall we say. Top fate midterm. Okay, what is the play for tomorrow? I cannot tell you. Should I buy IMAX stock? Well, I think you're going to do well if you buy Apple. Why? Because Apple is splitting 4 for 1. Now, let me tell you something a little bit about Apple, and I put this out in the trade alerts. Typically, when a stock like Apple that's so widely held, and by the way, let me tell you a little interesting tidbit. Warren Buffett, who's considered the world's greatest investor, we've been hearing that for about 20 years. He basically sold all of his airline stocks. So what does that tell you? Well, the airlines stink in terms of investments. Though UAL and AL, I love the airlines. I love to fly places on them, but I don't like their stock. So he sold all those stocks after big fanfare that he was buying Delta Airlines. Well, he sold everything. Guess what his number one holding is? His number one holding is Apple. Why? Because Apple is the future. It's like Tesla. So Apple is going to split 4 for 1. The Apple stock should, in the short term, see its height in terms of price. It should be approximately on August 27th. And why do I say August 27th? Well, when you split a stock, it follows a very predetermined plan. As a matter of fact, I showed everybody this on the Action Trade Alerts. It typically will, right before it splits, it goes to its highest level. Then as the stock splits, people will sell off part of their portfolio. They might have 100 shares, so they end up with, if they have 100 shares, they end up with 400 shares. So they'll sell 200 shares. So that depresses the price a little bit. So I suspect in the near term, the high price for Apple stock probably will be between about August 24th and about August 27th. After that period, it'll go back down a little bit, but it won't go down. It won't go back down to where it was a few months ago when it was selling at 260. It won't. It just won't. So the shares themselves will become, maybe $120 or $100 or thereabouts, but but right after they split, they'll go up. And the reason is because Apple is producing incredible numbers, and it's just a fact. And they're one of the biggest stocks in the in the S&P and in the S&P and in the QQQ and in the Nasdaq 100. So yes, I would recommend Apple stock at this time, because I do think you will do okay. You have up until the 24th to buy the stock to take advantage of the split. So kind of a cool thing. It doesn't happen very often that happens. I have another question. When will Tesla join the S&P? Well, they're definitely up on the bubble to join the S&P because they've had 4 quarters of good results. And Tesla's, as everybody knows, I hold Tesla. I've been trading it since 361, which is basically the first base. The second one was 869, I think, and then we had a alternate entry at 1,000. I do think that Tesla is going to move higher upon entry into the S&P, and I think that's going to happen probably within the next 2 or 3 months. So we're still, who knows, but we're still a little bit out. A lot of the funds now are having to buy Tesla. They don't really want to buy Tesla. They prefer to have bought it when when I did initially, but they didn't for a lot of reasons because everybody thought that electric cars were stupid and the whole thing. So now they're getting religion. They're having to buy Tesla. Well, of course, they don't want to buy out once because that will move the market. So I do think that there is a tailwind right now with Tesla stock. Now, you don't have to own 100 shares. You don't have to own. You can only own 1 or 2 shares. That's a great way to play this. I do think Tesla is going to go higher, and right now, here's the chart. I just pulled up the chart for Tesla. It kind of moves sideways today. It's 1418, which is down a little bit. I do think that we're in a trading range from about 1350 on up to about 1550 on Tesla, but it did move down a little bit today. We did have some selling going on. We did have some buying, but it's still a very, very bullish chart. We are above the 50-day moving average. We're above the 200-day moving average, and we have relative strength of 99, and we're in the second best category of all of the 197 categories. So I do think that it's going to be pretty powerful. And I'm really at this point, I am selling options on my Tesla stock, but I'm not currently selling the underlying stock. And I might sell the underlying stock if the price is right. So that's kind of where I'm at on that. Do you think that Tesla is going to split? Good question. Until it's in the S&P 500, I don't think it is. But when it gets in the S&P 500, I think there might be a split. I think that what's going to happen with the Apple split, I think we're going to see a lot of interest in splitting the stock, because even though fractional shares are okay, it's an okay way to go, but it really isn't as good as splitting. I think they should split the stock to allow some retail investors to get in on it. I think Tesla stock should be selling in the $100 to $200 range. I think it's ridiculous that it's selling where it is, but it's appreciated an awful lot. I mean, when I started buying this thing, I thought it was high, and it just went higher. So I do think it will eventually split, but who knows? I mean, I do think that it's going to have to go into the S&P 500 first. But always just wanted to point out that they don't have to split the stock. I mean, look at Amazon. I mean, Amazon's selling for like $3,000 a share. That basically the reason that they like high price stocks like this in these kind of companies is because they don't like the shorts to be in there. And that's one area that they've had issues with Tesla. There's been a lot of Tesla doubters out there, and there's been a lot of shorts on Tesla. There's been a lot of shorts on Tesla, and so that's why they want to keep the stock high. That's part of the reason why Amazon is so high. I think that, but I think you get to a certain point. I think Apple got to a certain point where they're like, look, we're getting to the point where no retail investors really can invest in this. So that's why they split it. I do think that that's going to, once people see the success, I think the Apple split is going to be so successful that a lot of other companies are going to have to reconsider. And I do think that that's going to put pressure on companies like Tesla and potentially Amazon to split their stocks. They really do need to split it. I think Amazon needs to be split about 10-for-1, to be honest with you. But I don't know if it's going to happen in the short term. The first thing that has to happen with Tesla stock is it has to go into the S&P 500, and that's going to happen in the next 2 months. It pretty much just has to happen. So there you go. No, Apple is overvalued. Well, that's what they said about Tesla too. It probably is overvalued. But again, remember, here's the thing about the stock market, and this is the thing about value investors versus growth investors. The growth investors have done far better in the last 10 to 20 years than the value investors. I know that, every college course is about value investing, but you know what? I am a trend trader. And right now, the trends are with the growth stocks. In the last 20 years, growth has totally blown away value. A lot of people that have value portfolios are getting reamed. They're getting killed. I do think that, I do think that we are seeing, we're seeing that. But I'm a technical investor. Okay, questions. Thoughts on Kathy Woods of ARK Investment? You know what? You can't. She is a quintessential growth investor, and she's done incredibly well. And kudos to her. Look, everybody. Now, I don't know if Tesla's going to go to 7,000. I think that's a little bit. I think that's a little bit much, but the proof's in the pudding. ARK Invest has done extremely well, and hey, they've done extremely well, and she's the reason for it. So it's been pretty tremendous. I'm at an hour right now, so I'm sort of at the end. I'm going to try to see if I can take the last questions, and then also you can get in touch with me online. It's super easy. It's just DallasTradingFloor.com, or if you're on TikTok, just go to my profile, hit the link, and it'll take you right to the sign phase, and it's totally free, of course. I'd prefer to go back to me too. I certainly would. But hey, you can't fight with success. It's done very well, and I think it will continue to. I do think that Tesla is one of those stocks. It's entering a new era. We're entering a new era, and there may be other ways to play the Tesla thing. I think that we're coming up on something potentially with Ford. We're not there yet with Ford, but I definitely think it's a watch list. I do think electric vehicles are going to do very big. I don't think I'm going out on a limb on that. I do think that's going to happen, and there's also great ways to take advantage of that. Thank you, everyone, so much for watching today. I'll be back tomorrow at 2:30, and if you have any questions that I couldn't answer online just because of time, just send them to DallasTradingFloor.com. And just go there and then ask a question, and I'll try to get back to you as quick as I can. Thanks again, everybody. Oh, wait a minute. I have some more comments here. Okay. Do you think they'll kick? Yes, they will. What happens is in the S&P 500, the one at number 500 is on the bubble. They'll leave, and then Tesla will come in. That's typically how it happens. So that's how it works when they take and put a new person into the S&P. So thanks so much, everybody. I will see you tomorrow at 2:30. Thanks so much.